What's up, guys? We have another AnswerStock. We have two other millionaire traders, Matthew Owens and Paul Scarlardi. Thank you guys for tuning in today.
Good afternoon. Good afternoon from Minneapolis.
How's it going over there?
You know, this weekend, on Sunday it was the worst. Normal temperatures were -10, and wind chill it was -30. Now it's a warm 20 degrees, so we're out of it now.
How's it in Florida, Maddie?
Oh, it's beautiful. It's like 70, 60-ish.
Yeah, I need to head to Miami.
There you go. It's actually kind of warm in Miami right now. Where I am, it's pretty nice.
I'm going back there in a few days. But let's talk about the stock market. What are you guys seeing right now that's working, if anything?
Well, I know for me, I have key things I look for on the charts, and today was the SPY, the S&P 500 closed above a key area for me. So, barring any kind of crazy news this weekend from China or oil, I think next week we can continue to see whatever you want to call it, a short covering, a bounce back, and then really see what's going to take hold. But I think it's still it's a scalper's market. It's a take profits when you have it. I'm typically a swing trader. I have a list of 30 stocks that I'm watching for potential swings into this year when we stabilize. Until then, I'm doing more quicker trades. And I think that's what it is right now until we get some kind of sense of are we going to stabilize or not.
What do you think, Maddie?
I completely agree, as it is a trader's market right now, but we had a beautiful bounce off of a key support area, which was 1800, nice psychological level. Market bounced pretty much almost 100 points in 3 days. It's not sustainable. The key test for the market overall is going to be 1930. If 1930 fails and buyers cannot take that back, we could see lower capitulation below 1800.
Cool. For me, every day there's been a really hot, low-price penny stock that's gone up 20, 30, 50, 100%, even when the markets are crashing. So, my people, I've been trying to look for a good photo of, the American guerrilla warfare that took down the British Red Army in the Revolutionary War, Maddie. There's a little history analogy for you. And it's like, we're firing from the forest, on these stupid redcoats, and they're just all lined up, and we're just picking them off one by one. And I think that's the way to be, because if you look at these big hedge funds and mutual funds, they're down 10, 20% already in the first few days of the year because they have, 50 positions long, 30 positions short, and it's like the war of attrition. And I think the key right now is being a sniper hiding in the trees.
I love that analogy. That was a good one.
I was looking for a good photo, but it just doesn't exist, so I think we'll have to recreate it. So Paul will be the Red Army, and we'll be in the trees, shooting at him. Hold on one second.
Tim, and to your point, I thought two interesting was really ugly were KONE, which is a low float China play on the earnings, and then that OPTT, which had, a test on their wave, their wave energy. Just good example of what you're talking about, that even when the market was in panic mode, you still had some the right news could still move those little stocks or those, the $5 and under stocks. And, I agree. I have seen that a few times, and those are two examples.
Matt seems to know a lot about finance. Did he major in finance or just read it from books? Tim and Paul, did you also major in finance?
Yeah, actually my major is in psychology and linguistics, and my master's is in forensic psychology. Read everything I know about finance pretty much. Never had a finance background. Always just been interested in markets. So in order to understand markets, you have to know what you're looking at pretty much.
As for me, I'm an accounting major. I was a CPA. I'm very proficient with accounting, SEC filings, financial metrics. I was an auditor for one of the big 5 firms at the time and was a CFO. So good thing I'm able to make what some people can be intimidated by very easy. I won't say exciting, but I make it as fun as possible. But the good news is, Matt's an example. He's applied himself, and now he's very proficient, not only in accounting but in finance. But that is my background.
Cool. Yeah. And, I mean, I was a philosophy major, which actually helped me really realize how full of shit most people are on Wall Street. Let's take one more question. So 2016 has turned out to be a choppy year already. What do you guys think for long-term investors?
Listen, we're a month into the year. I know all the cliches, how goes January, goes year, blah, blah, blah. Every market, and I've been doing this for 18 years, bull, bear, there are quality stories, long and short, that are going to occur. If anything, for me, this correction, or whatever we want to call it, has made some quality stocks that aren't going to be affected by a China slowdown or et cetera, incredibly cheap. So there are going to be plays in every market, and I think it's important not to get in the Great Recession, there were a lot of great long and short. So I'm super optimistic about 2016. I have a list of over 30 stocks I'm watching, and I think there's going to be opportunities abound in 2016. Matt?
Oh, okay. Sorry. I don't know. As I'm not an investor, so I can't really speak to it. But all I can say is that if you are an investor and your portfolio is long, then you need to understand how to hedge. That's it. There's nothing else that you can do to really protect yourself, because most people, especially mutual funds, have to be long all the time. Hedge funds, they have a little bit more leeway, but most hedge fund managers usually go long. They're not long short. And really, it's just, I can't really speak to what investors will do except keep buying dips and pray that the market doesn't tank more. And that's a numbers game that I won't even get into. I think that China is faking their numbers to this day. And I think that it can get a lot worse if you keep on having such forced liquidation. And that's what's happening. These hedge funds are blowing up and they're too exposed to other countries, and it's a compounding effect, and you're seeing forced liquidation on the market. And it's not to be doom and gloom. I mean, it will correct itself, but in terms of like stocks without macro markets, sure, you're always going to find stuff to go long and short, but it's not something that anyone can really comment on except, be safe. You can't be an investor and just keep buying every dip. At some point, it's going to stop. And when that music stops, if you are not hedged properly or you've lost all your money, there's no escape for you. So that's my 2 cents.
Yeah, I think hope is a very dangerous strategy. It's worked very well. Obviously, I'm not saying bet against the American economy, bet against the stock market. The stock market tends to go up over time, but know where we are. We have had 7 good years. It wouldn't surprise me a ton to see us go down 20, 30% this year, or maybe we're just going to be down 5 or 10%, or maybe even finish up 5 or 10%. I don't try and make overall market predictions. What you do have to recognize is that there's a definite change this year versus the prior 2 or 3 years. And, you can't be too aggressive with anything. You don't want to blow up. You want to stay in the game. And that's why, again, I'm going back to my analogy of guerrilla warfare. And I think that being a sniper, aim small, miss small. If you go in with a thesis long or short and it doesn't play out, it's okay. Just move on and don't let really any big disasters happen to you or your account, because that really kills your confidence and it really kills your strategy going forward. So I've had some losses this year. I've had some gains. I'm already up like 12% in the first 3 weeks, but small losses are key. And I know it's not fun for your ego to admit that you're wrong, but don't let small losses turn into big disasters. That's a big problem that a lot of people have. Let's get to one more question. This is from Tommy in Montreal. And he says, long or short, which do you guys prefer? And which do you think newbie traders should be doing? Good question.
Paul?
Well, historically, I have been more long than short, but we've also had 7 years of a bull market. So during the Great Recession, I was shorting more. But even then, you have to have stocks that are popping to short unless you're shorting sectors. However, I would say as a new trader, you want to learn both strategies and learn a foundation and practice and paper trade. But I wouldn't limit yourself to have to pick one, long or short. I think that limits you. I think as a new trader, you want to learn both.
I completely agree, except for me, I'm much more of a macro trend trader, meaning that if the trend is down, I will be more skewed to the sell side. If the trend is up, I will be more skewed to the bull side. So for me, in a down market, I look for basically bear rallies or a bull rally, if you want to call it. It's basically a dead cat bounce to sell short. But like Paul said, you need to know both because it can flip on a dime. You go from one cycle of being in a bear market to the next cycle, which is a bull market, and so on and so forth. So you need to have what Tim has said before, both a forward and a backhand. So just like in tennis.
I'll make another analogy. This is the New York Giants champions 2011. Awesome, because they had an offense and a defense. This year, the Giants are terrible. Our defense is terrible. And, you forget about forehands or backhands. If you don't understand shorting, you're forced to be bullish. Most of the world only thinks you can make money in an up stock market. That's not true. So most of the world is panicking right now, where Paul, Matt, and I are all up in a down market because we've learned to, utilize the different markets. And that's what you really have to be. I mean, it's just a question of how opportunistic do you want to be. Short selling, to be fair, is risky. It's probably tougher to learn because you're like, wait, you're taking a negative position, but should be required, education if you want to be a well-balanced trader and take advantage of everything. I have a few students who have been buying a lot of these quick January effect spikers, between 9:30 and 9:45 a.m. Eastern, even if they're total junk, and then turning around and shorting them at 9:45 or 9:50 a.m. Eastern as they come back down. And if you can take advantage of both moves, that's really exciting. So for me, I like to see and take what the market can give me. And if I don't understand short selling, then I'm missing out on a lot of opportunity. XLIT is a boiler room pump right now, Jordan Belfort style. It started its collapse, and many people just, see, okay, this is a pump, I need to stay away from it. They don't recognize that they can short it. Tim Grattani, my second millionaire student, actually shorted XLIT, and he's banking. So take advantage of all opportunities and really, understand that you can make money in down markets too. You don't have to be bullish. The firm whose slogan was "Be Bullish" went bankrupt. Remember that, Maddie, or were you in diapers then?
I was young, but I know what you're talking about.
What's the firm's name?
Shit.
Are you kidding me?
Yeah, I can't remember.
Merrill Lynch.
There you go.
They have their little bull, and they're like, "Be bullish," and actually, they're bankrupt. So.
Well, they were bought out. So.
I'm gonna throw. Well, yeah, pretty much bankrupt. I'm gonna throw one little question for everybody. Paul, what is your biggest tip right now in this market? Because we have some people freaking out. You've been doing this for nearly 2 decades. What's your best tip for everybody? Not like a stock tip, but like a lesson.
Yeah, I mean, I think it's being disciplined, following rules, and minimizing positions. Like I'm doing trades in this market, but I'm not doing the same position sizes I was doing last year when it was a massive bull run. So I think it's just conservatism and rule following and discipline rules the day right now.
Matt, what's your one tip?
To put it into a quote, stay frosty, my friends. But most of all, just be nimble. You cannot swing for the fences. I mean, you should never do that, but this is not a market unless you go short a lot that you want to be caught on the wrong side of a move, because volatility has expanded so much that if you really stick to your guns, you will get hurt. So you need to be nimble, you need to be quick, and know why you're getting into a trade. That would be my one tip.
Jack be nimble?
Jack be nimble. Jack be quick.
I'm going to throw out another quote, and I'm going to say, stay thirsty, my friends, because even if need to be conservative. You should always be looking for opportunities. Don't just be like, oh, the market's bad this year, let me turn off my computer. There's always opportunities. You know, if everyone starts losing a ton and you're sitting on the sidelines in cash, ready and waiting like a freaking sniper, like Bradley Cooper in a very great movie, you can really pick off these opportunities. Even though they might be small, it's not just about making the most money. It's about learning the most. And small opportunities can really teach you a lot. I'm trading with just $12,000 this year. I'm learning about the PDT rule. I just found out I'm under some 90-day restriction at E-Trade. And the E-Trade rep is like, why don't you just take the $200,000 that you have in the E-Trade bank and put it in, you know, so you're over to get over these calls. And I'm like, no. I checked myself into prison. I have to stay here. I don't just get a, you know, this isn't like Narcos. I don't just build myself a prison that I can escape. I'm in prison, which is good. I'm going to be making a video lesson on why my E-Trade account is restricted right now, but there's lessons to be learned from this market. There's lessons to be learned from small gains and small losses. And there could be some very great big winners coming up. You just have to be prepared each and every day. So that's my thing for today. Thank you guys again. See you next time. Hit up admin@timothysykes.com if you want your questions answered on the next AnswerStock call. Matt, thank you for joining me.
Have a great weekend.